folks, and welcome into today's video. Hope you guys are doing great out there as always. So I was just on CNBC app a little while ago, and I saw this gentleman, fund manager Rich Bernstein, and basically he said this is the biggest bubble of his career. And guy looks about, I don't know, maybe 50 or so, and I thought it was interesting. I was like, biggest bubble of career. I really want to hear what this gentleman's saying, okay? So what I want to do in this video, I want to go through what he's talking about in regards to what bubble he sees in the stock market. Then we're going to go into my 2 cents on this. Do I believe we're in any sort of stock market bubble? Where do I see places to be scared of? Where do I see opportunities in the market? And so this video is going to be talking more around the markets in general. We might get into some individual stocks in this video, but more the market in general, and this bubble talk, which I think is a fair discussion. Anytime you see the markets ever hit an all-time high, right, or get close to an all-time high, that's always a discussion, right? A bubble. And you hear somebody talk about the biggest bubble of their career. It's a subject worth discussing, and I want to give my 2 cents on it. So yeah, hope you guys enjoy this. Hope you get some value out of it. All I ask in return is that you smash that thumbs up button, and that's literally it, guys. I appreciate you being here as always. Okay, folks, so let's get into this bubble talk, okay? The headline was biggest bubble of his career. That's what he says. And when you see a headline like that, I have to watch this. I have to at least see what this gentleman's saying, okay? Now, when I heard the biggest bubble of career, the first thing I thought was, man, this guy looks like he might be 50 or maybe over 50, biggest bubble of career, was he around in the tech bubble days? Like that was a little different, okay? And so the fact that he would say that is a big comment in my opinion, but I don't know how long he's been in the markets. Maybe he's been in the market for only like 10 years or something like that. I don't know, okay? All I know is he said this is the biggest bubble of career, okay? Now, it gets a little less scary when you hear what he actually talks about, because the one that was interviewing him kind of pushes him like, okay, well, where do you see this bubble? Is it the market in general? Is it certain stocks and things like that, okay? So first is, he basically says any long duration assets. Now, this is a concept where essentially, if you're thinking about growth, okay, or you're thinking about an asset, let's say a stock, that is going to produce returns over a long period of time, and you're really excited about the growth in future years, right? And sometimes you're willing to pay up for that future growth, right? Such as, let's say Tesla stock, for example, right? Like, why is Tesla valued at $600 billion or $700 billion, right? Why is that? It's because investors are willing to pay up for what they believe is an extremely bright future for Tesla, where Tesla becomes a $1 trillion market cap, if not a several $1 trillion market cap, right? So folks are ready and willing to pay $600 billion or $700 billion as of today, right? So Tesla stock would be considered a long duration asset in which you expect the company to grow massively in future years, revenues, profits, everything alike, right? And become a giant. So it's a long duration asset. So what he is saying is he sees the risk in the market as being any of these long duration assets, meaning tech stocks, he said meme stocks, he said Bitcoin, he said cryptos, okay? So let's work our way this way here. Bitcoin, cryptos. Okay, so here's the thing with Bitcoin and cryptos. I believe if you are not a believer of Bitcoin or cryptos in general, you could always say that's a bubble, right? If you're not a believer in that, like if Bitcoin is valued at $1 billion market cap, you could say it's a bubble, right? A $10 billion, $100 billion, $1 trillion. Like, it doesn't matter what Bitcoin's at. If you're not a believer of cryptos and Bitcoin, everything should be considered a bubble to you, right? Like, you have to, there's two crowds when it comes to cryptos in Bitcoin in general, right? There's a crowd that super believes in it and believes, Bitcoin's the future, cryptos in general are the future, taking over the world, right? And you got the other crowd that says those are pretty much worthless, right? And those are the two main crowds you have. And so you kind of got to pick one, but you can't kind of be in the middle in this situation. It's really, really tough to be in the middle, because then it's like, okay, so you kind of believe in Bitcoin, but you think it should be valued at $100 billion. Well, why $100 billion instead of $900 billion, right? And then you get caught in this situation like, yeah, I don't know. Like, why is that? So that's one pushback I'll have there. Anytime somebody says Bitcoin's a bubble or crypto's a bubble, you could have said that anytime in Bitcoin's history. But it really comes down to if you're a believer of cryptos long-term and Bitcoin specifically long-term or not, okay? Let's talk about meme stocks. So there's always going to be certain stocks in the market that probably get way overvalued for whatever reason. It's hot on a trading day or something like that, right? And meme stocks are the new thing because the stock market is much more popular nowadays, and it's so much easier for people to communicate about the stock market, right? But you got to understand, there's always been random stocks here and there that shoot up huge for whatever reason for a few days, a few weeks, or even a few months. And if the stock doesn't really have great fundamentals, those stocks come down very, very quickly after, right? And so this, yeah, but it doesn't matter. Like every single year I've ever been in the stock market, I have seen stocks that got way overvalued on a short-term basis. And when I say way overvalued, I'm talking about ridiculous. Like it didn't make any sense, okay? And the business fundamentals just weren't there, but it became a super hot stock for whatever reason. And like I said, if the fundamentals aren't there, they come crashing down. And so these meme stocks or these random hot stocks in the market, like that happens all the time, okay? That's just flat out. That's the way it is, right? The ones over the past few months were GameStop, obviously, AMC stock were kind of the two biggest ones that were, you know, the meme stocks, right? And look at how fast those ones rose and then fell, right? AMC, I think, is down about 50%, if not more than 50% from its 52-week high reached a few months ago. Same exact thing with GameStop, right? And there will always be stocks after AMC and after GameStop. There's going to be stocks next year that are the new hot stocks or the meme stocks or whatever you want to call it, and become that, and then they shoot up like crazy for a few days, few weeks, few months, and they come crashing down. I remember Volkswagen randomly got caught into some situation. This might even be way back when I was getting started in the stock market. This might have been like 2008, 2009. I remember Volkswagen stock got caught up into some crazy situation way back then, and the stock went crazy for like a day or two, and then it came crashing back down. Like you never know. That's always going to exist in every market every year. Every market, every year, you'll get some ridiculous stocks that just go crazy, okay? Long term, the fundamentals game. Tech stocks, okay? So here's the thing. Big tech has been trading rich. But here's the thing with these companies. Look at their earnings. Look at their revenues. Look at their EPS. These companies have been growing at a clip that is absolutely astronomical. Now, whether these companies can keep it up or not is another discussion. But at the end of the day, when you really look at big tech and you look at the valuations that Apple, Microsoft, Facebook, Google, Amazon, those type of stocks are at, they look rich, right? NVIDIA, you could even throw into the next batch down, right? If I think about the next batch down under the $1 Trillion Boys Club, right? You think about like NVIDIA, you think about Tesla, some of those stocks. There's no doubt some of those valuations are absolutely rich. But when you look at the growth rates of these companies, how long does it take them to really grow into their valuations? Maybe a couple years. I've looked at I'm finally an Amazon shareholder now, but I've been watching Amazon for the last decade plus, right? And it was a stock that always traded rich, but it always grew into its next valuation. Same thing with Apple, same thing with Facebook. There were certain periods where they looked rich, and then they grew right into those valuations all of a sudden a year or two later, and it's like, oh my gosh, like now all of a sudden this valuation makes total sense. And it happens real quick, okay? So when it comes to big tech, yes, they trade rich, but at the same time, they grow into these valuations actually rather quickly, right? And a lot of times analyst estimates are too low, they beat those numbers, and the next thing you know, everybody's buying the stock left and right, and then all of a sudden the valuation gets pushed again, and everybody's like, oh, this looks a little rich now, and then they beat analyst expectations again, and they grow into their next role, right? So that's something to keep in mind. He didn't mention any stocks like Zoom or Shopify or some of those stocks. I'm sure if he would have went more into detail, I'm sure he would have mentioned some of those stocks with high valuations as well. But with a lot of those stocks, who's to say they can't grow into those valuations really quickly as well? So these are some things to keep in mind. People are going to pay up for this. He makes a point around interest rates, and well, if interest rates go up over time, that's always a possibility, right? It's always a possibility interest rates go up, and maybe these long duration assets aren't worth as much because of that. But at the end of the day, if all of a sudden the stock market slows down, overall economic growth slows down, what ends up happening? They bring down interest rates, and then those stocks climb again. So you kind of get into this weird situation where, I don't want to say interest rates are permanently down, but, it almost makes sense that they have to kind of keep interest rates extremely low nowadays. It just is. Unless you still see great rises in assets and income and jobs and all those things with high interest rates, outside of that scenario, you kind of got to keep interest rates low, right? So these are something to kind of think about there. That's my 2 cents on that part there, okay? This part, now, he's not worried about a bear market in general, which I thought was interesting, because if you're going to go out there and say something like this is the biggest bubble of your career, I mean, I would assume you'd want to mention something about like the market being at worry, but he actually is not worried about the market in general. He's not worried about a market correction, a bear market in the stock market. I thought that was interesting. That's just an interesting kind of perspective there, that you would go out and you would say something crazy like that, and then you would say, oh, I'm actually not worried about a bear market at all in the stock market. That's just interesting. So it looks like he sees particular bubbles. And like I said, to me, it doesn't make sense. like I said, Bitcoin and cryptos, you can always make that argument, right? If you're not a believer in them, you can always make that argument, right? Meme stocks, like I said, random stocks are going to come and go that don't deserve some crazy valuation. They come and go, right? And then tech stocks, you could always make an argument that tech stocks are overvalued. Always. But at the end of the day, these unbelievable companies, they grow into those valuations so quickly, man. It's absolutely amazing, right? And so that's kind of that. Now, my 2 cents on this, okay? One is, this is a stock picker's market, in my opinion, okay? Stock picker's market. There's certain times when it's like, just buy an index fund, right? And if you don't want to put in any work to the stock market, buy an index fund. Fair play, right? But in my personal opinion, this is a stock picker's market where the best opportunities are for the people that know what they're looking for in stocks, know how to judge business models, know how to read financial statements, and know how to value companies and understand on a high level, like how what forward P makes sense for this company, what price to sales ratio makes sense for this company, things like that, right? In my opinion, the folks that know how to do that, this is the ideal stock market, because although there are some stocks that definitely can get way overvalued, there are some stocks that are really undervalued in this market. And particularly with a lot of the smaller cap companies, the smaller companies, the small caps, the little companies, right? That's where I'm seeing the most opportunity in this market. And so right now, in my opinion, this is a stock picker's market in which the small caps have the advantage, okay? And so if me as a stock picker and somebody that's been doing this for over a decade, where I'm spending the majority of my time is in small caps this year. That's like, if you really look at the majority of stocks I've been buying, the majority of them have been under $5 billion market cap. That's where I see the best opportunities in the market, and that's where I am actively investing the most money, okay? Now, recently Amazon dipped. I bought some of that stock, but for the majority of stocks that I own, and you see me adding to, and I'm like, hey, I just bought this stock, that stock, it's a whole bunch of stocks under $5 billion market cap or under $10 billion. And it's just because that's where the opportunities are in this market. So me as a stock picker and knowing what I'm looking for in business models, financial statements, valuations, that's where I'm seeing the true opportunities in the market. Big tech, you know, you can't go wrong with owning big tech, right? It's like, throw money in all the big tech, you'll probably make money over the next 5 years. Like, that's just the way it is, right? But where I'm seeing the biggest opportunity, and I always think about where's my biggest reward potential, right? And also, I don't have to take a crazy risk. I'm seeing it in small caps. That's where the valuations are the most attractive. It's a, you know, in a lot of the big companies, it's kind of like finding a needle in the haystack in terms of finding a great deal. It's much easier for me to look at a lot of the smaller caps and actually find great deals in this market. And that's despite the market being near all-time highs or at all-time highs. Usually, when you're in that sort of market, the small caps are usually a rip-off. They're usually the most overvalued, booming, right? It's not the sort of market we're in right now. We're in a market in which a lot of these small caps are down 30, 40, 50% plus from their 52-week highs. It's a very different market than traditional, and this is why it gets hard to kind of predict the stock market sometimes, because usually how it works is if the stock market's at all-time highs, usually the small caps are booming better than ever, right? And then if you get any major sell-off, the small caps get damaged heavily. I'm actually looking at it, and I think if we saw a sell-off in the market, I think we're just going to see a rotation from some of the larger caps into some of the smaller caps. And some of the smaller caps can thrive even if the market is stagnant for a while and things like that, guys. So that's personally where I'm seeing opportunities, and that's my 2 cents on what this gentleman said around kind of a stock market bubble and things like that. So hope you guys enjoyed this video. As always, I appreciate you guys joining me and doing a little bit of a different video on some commentary around a stock market bubble. If you're looking to learn everything I possibly know about picking stocks in the stock market, building out portfolios and building wealth from the stock market, check out the pinned comment down there. That would be to apply for my private stock group, private Discord chat, where you can learn literally everything that is up here that I know about doing this, guys. And also, if you haven't gotten a chance to check out the Hungry Bull app yet, definitely check that out. It's on iOS and Android now. It's a way to track stocks, track cryptos, listen to conference calls, look at financial statements, plus so much more, and read our daily newsletter inside that app. It's absolutely free. Definitely check that out. Thank you for watching. Have a great day.